Hello and welcome to the full FX Scandinavia. We're on the sidelines of the event. It's lunch, and we've had a great morning. Hopefully the afternoon will be as good. But I thought the viewers would be interested to know that Henry Durrant from Reactive Markets, hi Henry, is fond of poking the bear, because you said to me, Henry, there's something interesting happening in equities.
I did, yeah.
At which point, of course, I immediately sharpened all my knives and everything else I have. But what is going on then?
Yeah, so I think we obviously come from an FX market which is heavily OTC driven, bilateral relationship based trading. It's always operated that way, and it's operated on the basis of price competition.
Yeah.
We as a tech company, we've been looking at, are there other asset classes where perhaps trends are evolving, or there's market structure shifts evolving that might move that in a similar direction and make our technology more applicable to these markets.
Yeah.
We launched a venture in cash equities late last year, which essentially is off the back of an evolution in that market, which allows principal market making firms to trade directly with end clients.
So very different to the traditional equities market model as we would know it.
Yeah, so I guess the traditional equities market model is what the FX algo model is based on, essentially.
Yeah.
So obviously, agency execution, giving an order to a broker who goes off with their market access, executes on your behalf. This model we're operating is essentially where the end market making firms are trading directly on a bilateral basis with these clients. It's transparent. They know the client. They can optimize pricing for different flow profiles, all of the benefits that we have in and know very well in the FX world, but really a new phenomenon in the equities market.
Yeah.
So I think there were some regulatory changes. So the SI regulation in Europe, the confusingly called single dealer platform regulation in the US, that opened this up. But we're seeing actually, I think our colleagues are actually this week just at an equities conference in Paris, and the main theme of the day is this move towards bilateral trading. So it seems that market is opening up, and it seems that the drive from the buy side is there.
Is it happening? What's happening beyond the execution as part of the workflow? Because obviously the big thing with equities is like, we've got a tape. So we can actually, just measure against the tape. I mean, is that still applicable in your model?
It's applicable in the sense that you have to, as a market maker in equities, you have to price within the market price, essentially the tape. So the near and far touch, essentially, in the market. What this allows, though, is now that the market makers can differentiate flow for different clients, they can now decide, well, actually, I'm willing to show, I've got interest available at mid in these stocks for these portions of the day. I'll show them to that client, but I wouldn't show them to that client, or I wouldn't show them publicly on a venue, essentially.
Yeah.
So it starts to open up that, and that price differentiation means that clients can now essentially take a unique source, a unique feed of this bilateral liquidity. It's tailored for them, and they can add it to their execution stack, or they can, in some cases, replace their existing execution workflow.
Because we've heard a lot on stage today about market impacts, information leakage, and I guess it takes that out.
Exactly, and then obviously having that relationship with that market maker, you can now start to look at this and you go, well, every time I deal with them, here's the market impact. All of the same conversations. I guess in equities, because so much of the volume is executed on an agency basis, those conversations have never really happened. Right? There's not really a concept of liquidity management, and this is starting to move it in that direction. So
I have two observations to make. That is, firstly, easily the longest I've ever spoken about equities, I think, without saying an insulting word. So thank you for that.
Right.
And secondly, I think I've been saying the FX market structure is better, so I'm going to claim I'm right on this one. But I mean, clearly it is a growing model, and it just adds to that multi-asset class experience you're trying to build.
Exactly, and especially in certain types of flow profile, perhaps smaller tickets, more active intraday trading. I think it's proving to be a very good solution and far more cost effective.
Brilliant. Thanks for your time, mate.
Thank you.
Even if you did bring equities to this foreign exchange conference.
That's something new, didn't you?
Yeah, I did.